Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back Jeremy Yeh, Senior Valuations Editor at CAP HPI, joining us for his roundup of how trade values performed in April. Now, last time we spoke to Jeremy a month ago, he reported on ongoing price stability, which resulted in used car trade values showing a 0% movement at the end of the month, ending a quarter of welcome stability and indicating more seasonal normality. So we're about to find out if that continued into April and how the market was impacted by the influx of part exchanges and defleets from the corporate sector generated by the March plate change, as well as any impact of that late Easter break. So plenty to talk about as ever. So welcome back to the pod, Jeremy.
Thank you, Curtis. Morning, gents.
Morning. Welcome back. It's plenty of bank holidays at the minute, isn't there? So we're squeezing these interviews in, but I'm sure we'll get onto them shortly, won't we, Jeremy?
I think we will, yeah, indeed.
You're enjoying the weather on the down south there?
Absolutely, yeah. It's beautiful today. I think it's going to be 23, 24 degrees and definitely going to be enjoying some sunshine later on and probably for the rest of the week, to be honest.
In your bar later, I suspect.
Let's not talk about that.
Well, we'll get on. Let's focus on what we've got you on for. So, I mean, in the intro there, Curtis talked about price stability in the first quarter, trade values, etc. But let's talk about what happened through the headline numbers to start off with at that 3-year 60 mark through April.
Yeah, so at 3-year 60,000 miles, it did drop 1.5%. I recall myself saying the prediction at the end of the last pod. We thought it would be anything between 1% and 1.5%. So thank God it didn't go over 1.5% because I would have looked a little bit silly. So it was more or less, it's in line with our expectation, to be honest. And 1.5% down at 3-year 60 and around £275 overall across all the sectors. So, yeah, like I said, in line with expectation, in line with seasonal deflation. You said it just now, Easter being late. It's been very seasonal is probably the best word to describe it overall.
And how does it compare with previous April months and periods?
Well, so the seasonal average is a 1.6% drop if you exclude the COVID-affected years of 2020 and 2021. Obviously, 2021, everything went crazy and prices rose significantly. So if you do remove those, it's 1.6%. So we're on the right side of it, on the slightly stronger side of the seasonal average. Last year went down 1.5%. 2023 went down 1%. And then if you go back before pre-COVID times, we had 2019. That was off the back of a strong year of 18. That went down 2.3%. And then if you go to 16, 17, 15, around 1.6, 1.4, 1.7 is the normal. So it feels very, very like more normal times. And it's difficult to remember those normal times because it feels such a long time ago. But we've just definitely feel like we've got back to those seasonal norms and away from any sort of, I guess, disruptions.
And we mentioned Easter, and you track, we're talking monthly figure there, but you actually track the market on a daily basis. I mean, how much did that Easter period, that Easter break, influence the values? What happened through that trading period?
Well, so the back end, if we go back a little bit further, start with the back week, last week of March, we started to see a slight softening in the market, but only ever so slightly. And then as we got into April, and bearing in mind the April school holiday period started first week of April, that week commencing the 31st really, and there were sort of staggered holidays across the country, a 3-week period. So that disrupted things. So we saw values drop ever so steadily, sort of 0.1, maybe 0.2 on a couple of days, but generally 0.1, or we had the odd day where it stayed flat. So it sort of got to the 1.5% very steadily. So there was nothing untoward, and it was just in line with, like I said, within our expectation, and nothing fell off a cliff, which was a relief for everybody. Nobody wants to see values fall through the floor. So it's just been. Yeah, it's been pretty good overall.
And your editorial this month, Jeremy, reports some pressure across all the age and mileage profiles that you track. Can you take us through what you were seeing on Cap Live?
Yeah, so it fell at all age and mileage points. 1 year 10k, it dropped 1.2%, which is roughly about £385. 5 year 80k dropped 1.6%, about £200. And then 10 year 100k, that dropped 2.1%. So that's about £95. So, it is steadily decreasing, I guess, across all age points and mileage points as well.
And how did the various vehicle sectors perform? Maybe starting with SUVs, which is the biggest sector for sold data that you have now. Were there any notable movers by price there?
Yeah, so overall, SUVs dropped 1.7%. You're right, it does make a large proportion of a data, circa 60%, maybe a little bit more at certain times. And that was in line just above the overall average at 1.7, and that was around £360 in monetary terms. And then if you break it down by size, small SUVs were hit hardest. I think there's quite a lot of volume around in that sector, in that size sector anyway. Medium, that dropped 1.6%, and large SUVs, they dropped down 1.7%. So it was pretty much replicated with the average of medium and large, but small definitely was more heavily affected. So if you look at some of the models, I think if you look at the one that everyone's talking about in a minute, Tesla. Tesla is obviously under pressure, but more for volume rather than sort of the Musk effect. I think we said this last month as well. Model Y fell by 4%. Model 3 was less affected, only dropping just over 1%, 1.1% overall. There are some other electric vehicles which were affected as well. At 3 years, Aura Cat, that's down 6% or £475. Mini EV, that's down sort of £550. Jaguar I-Pace also down, that's just over £1,000 at 3 years as well. So yeah, there was a bit of a mix of models, but generally going down. I think 80% of the BEV models that we monitor went down, and 20% either stayed level or there was a small increase for a couple, which was quite rare. So yeah, everything was pretty much affected in the BEV sector for sure.
And I think, you're talking about the BEV sector there, and we talk obviously, following 4 consecutive months of softening, and you mentioned there, obviously around the Tesla and a couple of other models. I mean, how did the hybrid market and plug-in hybrid and petrol and diesel markets now perform against what you've seen through that EV, that battery electric vehicle sector?
So the strongest drivetrain or fuel type was hybrid, normal hybrid, self-charging hybrid. That was down 1.1%. The next strongest fuel type was petrol. That was down 1.2%, circa a couple of £100. Next one was actually plug-in hybrid. That was down 1.3%, and diesel went down 1.5%. So slightly more affected by BEVs in terms of the overall movement, because diesel and petrol and hybrid just down slightly behind the overall average. So that, I guess, the volume influence of the BEV sector at 3 years now does have an impact on that 3 year figure overall by about 0.2 or 0.3. So it is, I think, if you take out the BEV movements, I think it's the 4th strongest year we'd have on record since Cap Live was introduced, since 2012. So I think there tells you a bit of a story in terms of, I think the fuel types which are on song and the ones which are in high demand still continue to perform relatively well, even in a softening market. It's just that influence of the BEV sector, which is still pretty volatile across the board, I'd say.
And you mentioned there, I mean, that BEV sector, obviously, you're saying there that obviously the BEV sector is pulling down the overall average now a little bit more than it previously would have done because of the volume now in that sector. But also, it sounds like those ones that you called out around those movements, there are certain makes and models that are sort of very weak within that BEV sector that are pulling down the EV sector in general.
Yeah, definitely. I mean, I think the ones which are more affected are the ones which we're starting to see now evidence for, whether that's a push from OEMs through, obviously through their dealer network. We've seen some large discounts on the late plate stuff, pre-reg stuff, which will have an effect on the up to 2-year-old market. And then the 3-year-old, we're starting to see such big volumes in things like Tesla Model 3. Okay, it wasn't massively affected this month, falling behind the average movement. But then even things like Mini Cooper EV, we're seeing massive volumes of those, but still really affected, even though, the price point does it's a real sweet spot in terms of for retailers and for retail consumers, but still continue to go down, which is a little bit puzzling, to be honest. But I think it just needs, I guess, the market, there's just needs to be more absorbed. More volume means more demand, and I think demand remains pretty similar, really. There might be a few more people stocking up on EVs, but I don't think anybody's going out there and buying them in masses at the minute.
Yeah, you just start to see that effect of some oversupply on certain models at certain age profiles as a consequence of that real push market, 2 and 3 years ago, isn't it now?
Definitely. I mean, high registration 3 years ago is definitely having an effect now. And I think, we've had some franchise dealers which have dipped out of the market throughout April as well. There's been some buying bans. So there's been some funny things going on in terms of which has affected demand. But I think people stocked up pretty heavily, towards the beginning of the year as well, maybe January and February time. So, maybe just took the foot off the gas through April based on, I guess, holidays and, less people being around, both from a retail consumer point and from a dealer perspective, and from a buyer perspective as well, trade buyer.
Excellent. Well, we'll be back straight after this break with a bit more analysis from Cap HPI's Jeremy Yeh on the April marketplace.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Jeremy, each month you also analyse retail activity by days to sell. How did they perform in April compared to March?
So it's a continuing theme of the vehicles are selling, I would say, relatively quickly. Fastest selling fuel type at 3 years was HEVs, so hybrid electric vehicles at 33 days. And that actually outperformed petrol vehicles by 3 days, and petrol vehicles at 36 days at the same age point. BEVs at 3 years averaged 37 days to sell, so not bad, but still, just ahead of or just behind some of the hybrid and petrols. With BEVs about 39 days, with diesel at 40 days. So they're taking slightly longer to sell for those other fuel types. When we look at cars at 12 months old as an average age, 35 days. And those between sort of 4 and 5 years are 35 days to sell overall. So overall, it's still a pretty similar picture to previous months. So the demand is still there. Cars are still selling relatively quickly. It just might be slightly slower during across the Easter period, which is still yet to measure as we get to the end of the month and see what the real impact is of that Easter period. I guess it's still probably a little bit too early to tell of the impact of that.
And you also polled the views of the auction houses. What were they telling you about stock levels and demand over the course of the month?
Well, stock levels did increase. You'd expect that from the March plate change anyway. Part exchanges obviously increased through the auction market. So did some of the fleets as well. The fleet were quite late in terms of churning. So 46% said that the volumes have increased, and that was against 27% for March. 39% or circa 40%, about the same, and there was only a small proportion said it actually decreased. So I think there's probably only 2 survey respondents said it actually decreased, but majority said it's either the same or increased, which is as we would expect, to be honest, given the time of year.
And finally, Jeremy, I mean, it's crystal ball time, and you got away with it just last time with that 1 to 1.5%. Maybe we should reduce your gap there and ask for a single figure. But I mean, obviously now, in terms of the prices we're going into May now. We've got 2 more bank holidays in the month of May coming up. We're at the back end of obviously Easter now. The weather looks like it's on the turn a little bit. So what we want actually to predict the weather. That might be asking a little bit too much from you, Jeremy. But I mean, as we move now into this midpoint of the second quarter of the year, what's your view? Where do you think the market will start to head with everything that's going on at the minute in the supply and demand?
I think we're likely to see something similar. Generally, the average seasonal drop of it, again, if you exclude those 2020 and 2021, it's 1.6%. So I can see it being 1.5%. I'll stick to a single figure this time rather than give myself half a
You don't
percent
have
leeway.
to, right, exactly.
But I think, sort of a 1.5% overall. We don't think it's going to be much more than that. I think, it will be affected. There are 2 bank holidays. There's another school half term. Like you say, the weather is better. People will, tend to get away when they can. If they didn't over Easter, maybe they do the school half term in May. I think, demand will probably remain pretty similar. It might increase a little bit just over the Easter period, compared to the Easter period or to April as a whole. We think it's still going to be on a similar trajectory as what we've seen for the last month.
So essentially fairly stable then, isn't it? Because a 1 to 1.5% drop in the month for May isn't unseasonal now, is it? It seems fairly stable, should we say? And hopefully we'll get some good news from the Bank of England in a week or so when they announce their next base rate decision as well, which might stimulate a little bit of consumer confidence, might it?
I think so. I think we're all hoping for those glimmers of, we haven't got to listen to the radio or the TV and see what's happening across the pond, and changes his mind every couple of seconds in terms of what he's going to do and what he's not going to do. So I think we need some welcoming sort of interest rate reductions, and just to try and ease some of the pressures for everybody. We'll
see. Well, I'm sure Curtis has written down the prediction, ready to question you on it when you come on again.
Yes.
In May.
Yeah, I've made a note.
It down. He's made a note. I mean, again, as always, it's a huge appreciated for you to come on and give a little bit of sort of context behind that headline figure and dig into a bit of your views on the general market. And as always, if anybody wants to read the full editorial, it's available on the CAP HPI website. That's cap-hpi.com, or just check out any of the editors' social channels through LinkedIn with its Chris Plum and Jeremy Yeh and the others there at CAP HPI. And also there was a webinar this week, wasn't there, on Monday afternoon on the 29th that you did, which gave a little bit of an overview of the car market, the economic marketplace, the current LCV marketplace, Dylan's view on what the future looks like. And I think if they reach out to you, you can share the links to that webinar and the presentation, can't you, Jeremy?
Yeah, that's fine. If anybody wants to get a copy of the slide deck and a link to the webinar, then feel free to reach out to me over on LinkedIn or directly. We can share that with you. That was yesterday at 2:00. So if you didn't listen to it live, you can go back and re-listen and certainly draw down the slide deck for sure.
Fantastic. Appreciate it. Thanks for joining us again, Jeremy. Appreciate it.
Thank you. Thanks for having me.
That's all for this special weekday Motor Trade Radio podcast. Many thanks to Jeremy for joining us. Thank you to you for listening. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.